presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom. Nice to talk to you again. And I have to start out and first tell you I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Monday afternoon, 3 p.m. Eastern Time, final hour of the trading day, and we got markets de-escalation in a little bit of war risk, and that has markets climbing right near record highs. You have an S&P right now up by 0.9%, trading up 53 points, and yeah, you got some volume today, man. Check out this volume. All right, we've done 1.5 million contracts already in the S&P. That's a big number by itself. You see how many days in the past we haven't even done 1.5, and Friday's day was huge at 2 million, especially huge compared to anything we've done recently. Okay, Friday's volume day, 2 million contracts. That's the biggest day since April 10th when we had the volatility at the market lows, and we might run for that number, man. We got an hour left to go. You always get a lot of volume in the final volume on the close, and what did I just say? We need about 500,000 contracts. All right, let's put it on a 5-minute even. And you can see, in the last final minutes, we're going to get 40, we're going to get 60, we're going to get that many contracts just on the close, okay, let alone we're going to do the hour. So we're going to approach Friday's volume. We'll keep our eye on it. S&Ps right now up by 0.8%. NASDAQ 100, not quite the same deal. All right, we're at 351,000 contracts. We did 550. So percentage-wise, well off that number we did on Friday. We'll see if we can continue. And then on the Dow right now, yeah, not even close to what we did on Friday. Dow did 137,000. We're at 82,000 contracts right now in the Dow. We jump over to Ethereum. If you're getting into crypto, I had a question this morning. Okay, we talk about Bitcoin. We talk about MicroStrategy. People have made and lost a lot of money with MicroStrategy. I get it. You know, the multiples on this, but boy, if there's ever a run on crypto, and folks, there's going to be a run because there's a run on everything. Okay, there's a run on real estate, there's a run on equities, there's a run on banknotes. Okay, every type of asset class can have a run on it. When I say run, it's an overpriced event, right? And you're repricing, even on a short-term basis. Boy, the MicroStrategy deal. Okay, we were talking about it when we were at 543. This stratospheric run you had from 223 to 543, that's a game of hot potato. Okay, and who's getting the last one out there? But boy, Bitcoin, man. Bitcoin's the leader, far and away. Up by 3.5%, up $3,700. And yeah, don't even, Ethereum's up 5.1 today, but it's not even close, okay? Not even close in terms of the strength that Bitcoin has versus anything else. And there's only one Bitcoin, man. All right, we jump to the headlines. And yeah, so first you start with this one, okay? Trump says Iran wants to talk after waves of Israeli strikes. And on the front page of the Journal, a battered Iran signals it seeks to end. Okay, it wants de-escalation. Israel to continue strikes despite reports that Iran seeks to talk. That's just as 2:05 within the last hour. That one comes on there. Not surprising. Okay, we're going to go about our operation. So the tensions are still out there for a market that just does not go down, man. We are higher from those reports initially, okay? We're way higher. And crude, all things considered, there's your war premium escalation. We're only $2 or $3 over that level. I think people are shaking off a lot of tail, even if they're tail risks in this market, even just predicated on the price of crude, because nothing's really hit yet. But I'd be surprised if that doesn't happen at some point, sadly enough. All right, we jump to some of the movers today. And yeah, how about Roku, man? We're pushing the highs that we opened at, 81.67. They're doing a deal with Amazon. That's going to be a big one. And then we were talking about this on the morning program as well for Celsius. I decided to have a coffee instead of a Celsius this afternoon. Afternoon coffee, I feel you. I'm trying to get it out of my system. I know, I got to work on that Tiger War, Matthew. I'm going to work on it, man. I got to do it justice. I know, totally. I got to lean into it. I got to just let it go, man. Celsius, up by 5.3%. So we were talking about this on the program this morning, okay? And I believe they got an upgrade is what is going on this morning. They purchased a competitor around February. This was probably the volatility, maybe the down. $1.8 billion, I think. One of their competitors that's better for the female demographic in particular. But the one thing I'll say is that is some volume, man. That is a breakout. You come back in on lighter volume. You're trading higher. And this thing has some room to run. Straight out on a technical play here. And yeah, you're talking about coming from the doldrums, man, to 100. You double top, and then kaboom. All the air comes out of the room. And you give back all the gains back to January of 2021. Just like that, man. Let's put it back on a weekly. All right, we'll see how the weekly comes in. The weekly volume's been dropping off a bit since basically when we got up to a high right there of 38.35 on April 7th, and that was Liberation Day, right? No, that was Reprieve Day. Excuse me, 90-day reprieve. All that volume coming in. Since then, you're trickling higher. 43.37 for Celsius. All right, we jump around to some of the other movers. Amazon, how about it, right? Catching a bid, up by 2% today. Tesla, up by 0.8%. The chip stocks, NVIDIA, up by 2%. Check out NVIDIA, within $10 of all-time highs. AMD, I believe they got an upgrade as well today, up by 9.2%. Look at that volume today. Was it an upgrade? I believe it was. Let's jump around regardless. Palantir, not stopping, man. Up by 3.5%. On a weekly basis, the volume is unimpressive on Palantir. It doesn't mean that just can't keep rocking, man. Palantir up by 3.5% right now, $4.72. You check out Boeing. So Boeing, 201.79, up by $1.47. There's an interesting piece I was reading as I was actually getting ready for the program. Is that it? No, I'll find it. It's a journal. Let me make sure I can find it. Is it here? All right, I will find it. It's a journal piece, and it's talking about Boeing, and it's talking about the U.S. government. And they're intertwined, for sure. There's Boeing and there's Airbus. Boeing has 0% chance of going bankrupt, folks, because it's in our best interest to have an airplane manufacturer and not just Airbus, the European one. They work with defense, etc. But this deal going on with the Air India, it's one of those risks laying out there. And if it happens when Boeing's at 130 or 140, maybe not the end of the world. But it's happening when Boeing just almost doubled in share price up to 218. But look at that volume on that drop off on that number. News-driven event for sure. On a weekly basis, man, there hasn't been a lot of volume on that acceleration when you look at it from the lows. All right, folks, stay tuned. We're coming back with our man Steve Rhodes. We'll talk a little bit of markets. Don't go away. We're coming back with Steve.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now up by 52 points. We're trading at 6,083. And right now, folks, we're going to jump over to our man, Steve Rhodes. Folks, you can head on over to the front page of TFNN. Right under the Newsletters tab, you'll see Mastering Probability, Steve's Outstanding Daily Newsletter. You can check that out. All the newsletters come with a 30-day money-back guarantee. You gain access to a number of outstanding webinars. Steve Rhodes, good afternoon.
Hey, Tommy, how you doing today?
I'm doing well, man. How about yourself?
Good. Happy Father's Day. Never a dull moment in the stock market, in the war market, if you will.
No matter what, Steve, we got green across the board. There's wars, there's rising oil, and the market says, man, we're going higher right now. We'll see, but pretty. And how about and thank you for telling me, man. I checked out that first game when they were doing it in Canada for that national anthem. It was awesome, man. And boy, quite a cup. Florida Panthers. Marchand, man, it's just great hockey, man, to say the least.
Absolutely. And I just kind of, loosely reference. I hated the guy for 2 decades. Now I love him, right?
Some of those moves, Steve. 37 years old, the way he's shaking, man, off those face-offs. It's and Connor McDavid, just outstanding hockey, man. Pretty amazing.
And without Marchand, I'm not really sure where Florida would be in this tournament right now. I mean, he's been such an impactful player. So looking forward to tomorrow's game.
Totally.
Would love to see the Panthers, close it out, but there's nothing wrong with the Game 7. So either way it works for me. But in the market.
Talk to us about the market.
About the S&P. Yeah, you're talking about the S&P. S&P moving up towards its highs and so forth. So the question that I kind of throw out there for us to answer is 2025 a bullish or a bearish year for the S&P 500? And the question is, do bullish or bearish stock market years have anything in common? So that's what I wanted to share with you and the listeners out there. And the first place that I'll start, one of the tools that I use that I have access to, it's a great tool. It's the seasonal charts that are put out by the folks over at SeasonX. And and they've taken like the Dow, it goes back 127 years. And I used to have to do all this data by hand in a spreadsheet. It took forever. It's nice to have one tool where I can just punch up what I want. And here's what I have punched up. I punched up first. This is the analog, if you will, of years over the last 96 years. There have been 32 years that have been termed bearish. And one of the first things to note is that red vertical line on that screen there, that represents the January high. And in bearish markets, the January high never gets taken out. So that's important for folks to understand. There's also the opposite of this, which is in bearish markets, what we also know is that price starts trading below the January lows. And when we do that, they can lead to an overall bearish market. So just by simply having the seasonal patterns, understanding what takes place in a bullish market, what takes place in a bearish market, we have some clues out there to look for. So the January 2025 high, and I'm referring to the S&P 500 right now, the January 2025 high is 61.28, and thus far it's held. It was tested in the early part of the year, but that level is held. So we're not up there yet. Yes, we're getting close, but the key number for folks to watch, in my opinion, is 61.28.18 out there. On this chart here, we can see that price did trade below the January low. So if we take a look at January 2025, where my cursor is at, but, we're back inside that range right now. So it hasn't proven itself one way or the other just yet. But we know that we haven't traded above the January high. So I'd say that, we're leaning a little bit more bearish than we are leaning bullish. If we take a look at... If we take a look at 2023 and 2024, just so folks can get a feel for this, here what we saw was the January highs were tested. So price rallied in 2024, pulled back, test those January highs, and then continues to move forward. We had the similar type of thing back in 2023. It was not until the October low that came in. It's typically we get a low, Tommy, in October inside the S&P 500, and we did get a close below that January high. This is a monthly chart that we're looking at, or weekly chart that we're looking at, by the way. But I require 2 consecutive closes below support or 2 consecutive closes above resistance to be proof that it really is a breakout or a breakdown. Otherwise, it was a false move. In this case here, back in 2023 on the weekly basis, those white arrows show us it was a false breakdown message. So really important to watch the January high and low. So if we take a look at, is 2025 a bullish or a bearish year? Well, as of today, I'd say the S&P, again, has got more bearish tendencies than they do bullish tendencies, simply from the standpoint of watching that January high. If we take a look at the S&P 500, here what's going on with regard to topping patterns. Here we've got a daily Rhodes Momentum Indicator top that makes 60.59.40 a key level. If price closes above that, it negates that signal and suggests that we move higher. If we take a look at the weekly time frame chart, the center, that's got a Rhodes Momentum Indicator top. Here, price needs to close above 61.47.43 to negate that signal out there. So really important to watch those levels. Each of the instruments that I use to track the S&P 500 have got daily topping patterns. Now, what I mean by that, folks, I'm referring to the S&P Cash Index. That's on your left. We've just rolled over into the September contract. That might be affecting the volume aspect that you're looking at, Tommy, on the futures contracts. Okay. You've got the SPYs, and we've got the equal-weighted ETF, which is the RSP out there. So the key support level. So we had the markets on Friday obviously move down, but what they didn't do was bust through any support inside the S&P 500. So levels that I'm going to share with folks here, really important to be paying attention to on any down moves. That'd be 59.93 on the ES Mini. Again, we just rolled over into the September contract, so that's a new profile level. The SPYs have got 5.95.25, and the equal-weighted ETF, which is really worth paying attention to, is 175.89. All those support levels held on Friday. If we start seeing price close below that, that starts to tell us we've got at least profile changes in trend. That should lead to lower price. But we're not there yet. You talked about the NDX 100, the NQs. Here, if we take a look at the daily time frame for the NQ, the NDX 100, the Qs each have these Rhodes Momentum Indicator tops. The equal-weighted ETF has a Basil Chapman 7th wave top. That's the letter G that's out there. So each of these still have tops that are in place. So what are the key support levels to the downside? Because resistance, if price takes out those resistance levels, we're going higher. But what do we want to watch to the downside? In the NQ, it's 21.940. In the Qs, it's 525.48. And the equal-weighted ETF QQEW, it's 131.96. If we look at the monthly QQEW, it's got profile resistance up here at 133.89, and the weekly is trading into its Rhodes Momentum Indicator top. We've got significant resistance here in this 131.96, 133.89 area. So that's what I would suggest that people are looking. They should really pay attention to the equal-weighted ETFs. The reason is the equal-weighted ETFs typically give us the true picture or direction of the market, where things are headed to, versus the weighted instrument like the QQQs out there. The only daily Dow chart that actually has a top is the equal-weighted ETF. The actual September futures contract doesn't have what I refer to as any kind of a top out there. Neither does the cash index. Neither does the Dow Diamonds. But the equal-weighted ETF does. So that says we really got to watch support in the area of 36.58 to 36.65. Your price closes below that, we start to head much lower. Remember, we have not taken out those January highs. So I still am with the premise that right now, market conditions, even though we've rallied back nicely, until we take out those January highs, we're more leaning towards a bearish market than a bullish market.
That's some pretty cool information, Steve. I appreciate it, man. I love all the exact values, of course, but the January deal, I guess it makes sense. As you're going over it, it's like momentum's everything, right? You got to take out the beginning of the year for everybody to get in that mode. It makes sense. Even I love how sometimes that technicals, it just makes sense. It does. Steve, I appreciate it, man. Have a great night. We look forward to the program tomorrow. I appreciate it, man, and go Panthers out there.
Thanks, Tommy. Take care.
Thanks, Steve. Take care. Folks, we'll be right back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Great stuff from Steve Rhodes. Check out Mastering Probability, folks, right on the front page of TFNN there under the newsletters tab. Steve's got some outstanding webinars, Mastering Probability. He puts out updates every morning, and he's putting out updates most afternoons on the market close. He lives and breathes that market. Check it out, Mastering Probability. S&P's up by 53. So we jump around to some of the movers today. As I mentioned, right, AMD, quite the upgrade, 8.9%. Talk about a rocket ship, man. My goodness. So AMD, they got a price target upgrade. 10%. Yeah, 10%. But guess what? They expect their AI business to surge after the third quarter when China-related charges have passed. Increased conviction among investors about a key hyperscaler client is what Piper Sandler puts out there. And boy, you talk about it, man. This thing, you're taking out everything, right? Even this little consolidation area you had from May 14th, boom. You take it all out with a large candle, and yeah, you're now trading back to where we were August 5th of last year. So the low there, okay, was 121, right? This was the area you were bumping up against. So put this on your radar if you're in AMD. It's been a heck of a run, all right? But this was your little area where you rejected it originally on May 15th. You're blowing through that right now, and you're going to do it with volume, man. Put this thing on a weekly. We're doing A to B, C to D. Okay, it takes you 6 months to roll over. These A to B, C to Ds, folks. Okay, doesn't mean it's going to stop on a dime, right? And this one was probably almost a 1 to 1.618, depending on where you started. Let's see. Start this one at the beginning of 2023. Yeah, 2023. You did. Check it out. So you go all the way up to the 1 to 1.618. Okay, if you blow past the 1 to 1, the 1 to 618, you barely peak over there. That was a weekly. Okay, reject that in March 2024. You really rolled over for about 6-8 months at the 1 to 1, and then boom, you finally take off to the downside after a couple head fakes. But this thing looks to have turned around. And now we're coming into this area, which is the lows. And look at that, the week of earnings, July of 2024. They were already facing some headwinds. You make a low, and that's kind of the wall of volume you're coming into. The low there is 130.24. And you did 400 million shares on a weekly basis on that earnings event. And that's the area that you're coming into. And yeah, that's not exactly a straight line, but you get the point. That's the area. And guess what? Look where it matches up with on the left side as well. Okay, they're just important technical areas. In that area, you're looking at about 125, right where we are right now. That's where you rolled over in 2023. That's where you bounced from in 2024. And that's where we're trading into right now. But that's how you like to do it. It's just Monday, and we've already done 100 million shares. You're breaking higher by 9%. And, you know, if you're looking to get in this equity, okay, you're already up from $76. You're at 126. Short term, you look for a pullback on lighter volume. That's what you're looking for. You know, you might not always get it, okay, but that's how the risk reward, I like it how it lines up. You look for a pullback on lighter volume. Maybe you look for a test of this area, the 120 area. You pull back on lighter volume, shorter term, on a longer term basis, okay? What I'll always say is, let's say you have a retirement account. You're looking to get in AMD. You said, man, I knew AMD would be a player. I was waiting for them to turn around, and I missed the buy with all the tariff volatility. Okay? It happens. Scale into an equity, folks. Okay? If you want to be in AMD, you think about a position that you want to start, whether it's you want to have some exposure to this individual equity in a retirement account, whatever it be, okay? Just longer-term stock trading portfolio. You know, pick a number. You want to put $5,000 in there on a longer-term basis, okay? Well, guess what? You put, you buy 10 shares today, and every 90 days you buy another 10 shares until you get there, which only takes you what? 2, 3, 4. Yeah, you'll be there in 270 days. In 9 months, you scale into it. There's a lot of volatility in this market right now as opposed to buying the whole thing. You're up from $86. Yeah, you're well off the highs. But I like that position on a longer-term basis. Now, don't get me wrong. when there's fear in the market, okay, that was the time. When everything was going to hell, that was the time, okay? On the flip side of that, though, you know, and listening to Steve out there as well and just different technical indicators, not hard to buy it at 4,800 risk-reward-wise, okay? Buying at 1,300 points higher, when we have a war breaking out, we have crude prices spiking, that's going to cause problems with the Fed. That's going to make it difficult for the Fed to cut. We have yields rising today, okay? A lot of optimism priced into this market. And guess what, man? We're going to start doing earnings all over again, man. Earnings are wrapping up. We're coming into the end of June, and we're going to get to do it all over again. All right, some of the other movers today. Yeah, Roku. This one I'm not so sure of, and I love Roku, okay? And we do watch the live TV portion of Roku in my house because we don't have a cord. Maybe the platform's going to change. Maybe the way that we're going to watch television and consume the Roku is going to change slightly. But the advertising that is served through a Roku that is independent of the streaming platforms themselves. So think about that. And they're there for sure. That desktop screen on a Roku that scrolls, that's probably the best one. But I use Roku literally to open the main screen and hit the app we want. And on the remote control, the apps are already there. Netflix, Disney Plus, Prime, they're all there. I hit that button and then I'm in the app. And then Roku doesn't get to show me anything. So can they sell their own advertising? Yes. I struggle to see that avenue being that large on the ad service when you think about it in that manner. Remember, once you get into one of the apps in Roku, that's it. Then you're just watching Netflix, and Netflix is serving you the ads. It's only in that little intermediary, and really, that's going quicker and quicker. Yeah, and don't forget about what this stock can do, folks. The pandemic darlings of almost $500 on Roku when they were somehow going to take over the universe. And the likes of Zoom as well. 588 back to 77. And yes, they'll be around. They're profitable companies, and they got to deal with Amazon, and the market likes that. But be careful on this pop on Roku, because you're coming up to a technical area right here. And this has been a tough one to get above, right where we are right now. We've been in this area since September of last year. And you see how many times we've accelerated. We sold off hard during the tariffs, and we're right back to that same area yet again. And look at this NASDAQ up by 1.4% right now. The chip stocks. NVIDIA up by 1.9%. Google up by 1.2%. Big day for Amazon, pushing 2.1% to the upside. Disney up by 1.1%. And we're going to talk some gold equities and some Kamiko. Let's check it out, man. Kamiko up another 3%, but giving it up a bit. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. You take a look at Cameco, trading higher yet again. Uranium stocks trading higher, and this thing, man, you talk about a one-way trip. $35, we double in price. Do it. $71.31, and you want to talk about some optimism, folks? Yeah, shorter term, you better watch out for a pullback. Okay, we've seen how all of these equities, when you're in this commodity business, can be very cyclical, whether you're going on a short-term or a longer-term basis. Okay, you see, it's almost like a wave function, right? And the wave is just getting larger each time. But if you gave this formation, okay, to any person to analyze it and say, what's the next progression of what the equity looks like? They'd say, well, the sine wave is coming, right? The downturn. It's human nature. Don't make it too complicated sometimes. We ripped higher last week with 44 million shares. And pretty remarkable that on an average basis, we're doing enough volume today to carry it on a weekly basis. You do 5 days like today, but guess what? Today's a big day, folks. All right, to get 5 days like we had today would be very difficult. To get last week's volume, you had a day in there of 16 million shares with a day of 10.6 million shares. The point being, we'll see if we can sustain the volume. We got one like week on June 2nd. And yeah, that was a shortened trading week too, I believe, right? Yeah. And then we get the big week last week. And that's how you want to break away. Okay, and really, the buy, if you're looking to get in, and boy, I say 61, but when you're dealing with an equity that just went from $35 up to 70, folks, and you're getting in, you better set a stop. Okay? Yeah, and even if it was 4 days, that's still very light volume for 4 days. That's only 5 million a day. And look at how much we're doing on a weekly basis, right? But yeah, you'll have a nice breakout on volume. Ideally, you'd want to see comeback, test you on lighter volume. And you test those recent highs, you test the breakout, right? And the breakout's here. It's a strong equity, man. Uranium's going nowhere. Constellation up by 4%. Now, they had quite the head fake going on where they make the deal with Meta. You actually trade lower on that news, and this is going into that bar, and boy, that's going to be a tough one. Constellation. Speaking of, jump over to Meta. Up by 2.6%, $700 is Meta. Yeah. And so they're bringing advertising to WhatsApp. It's wild that it took them this long. And I'm surprised it's not up even more. They are an advertising machine, and they have everybody in Europe uses WhatsApp, folks. You know, when I chat with my friends in Europe, my best buddy who lives in Switzerland on WhatsApp, obviously. And finally, ads are coming. And you're up by 2.7%, and you got highs out here of $740. And yeah, Meta, they're going to have their own Constellation Energy nuclear reactor for 20 years, along with Microsoft as well. And look at Microsoft, man. Yeah, that's an all-time high. 480.69 today. Netflix shares up about 1%. Disney's been doing well. Look at this. Now, you talk about technical areas. Disney's approaching a technical area, folks. You talk about cyclical natures. Not sure it's cyclical. Boy, it sure looks cyclical. Since about 2022, this area of 120, that's been a headache for Disney. You're looking at Disney, folks. Buy Disney at 90. Sell it at 120. You want to buy it for the long haul? Yeah, you're probably going to be okay. You're trading it in the short term? Buy it at 90. Maybe you write it down. You want to be more conservative? Buy it at 80. I don't think we're going back down to 80 on this equity, though. Okay? That's when Chapman was going on. That's when the whole world was shutting down with tariffs. And we're back to 120, and they have a strong slate of movies coming up over the next couple of years. But guess what? Optimism priced in. You're up 50% over a period of 2 months for an equity the size of Disney. And yeah, on a longer-term basis, you're bumping up against that area. And man, pretty remarkable that you're actually bumping up against that area. And look at, what did I just say? 90 and 120. Well, guess what? You could have quoted me in 2015. It was the same thing. Look at that bar in August of 2015 from 122 to 90 on the dot. Yeah, so you're bumping up against the highs of 2015. Now, longer-term basis, yeah, Disney's trading at the prices you traded at 10 years ago. Whew, you talk about it, man. And they do have a strong slate of movies coming up in the next couple of years. They got some Star Wars in there. They got some Avatar in there. What do they got? Toy Story 5 coming out in there. You know who the villain is in Toy Story 5? Is it 4 or 5? I think it's 5. It's the tablet, right? Is that what it is? I think it is. It makes sense. Those tablets. They're coming for all the toys. Playtime with toys, still very important. All right, let's check out yields. And that's where, you know, if war is not the biggest impact, okay, crude can be. Excuse me, that's what's to keep your eye on, man. You see this crude market starting to spike. You start seeing gas prices going up. You start seeing inflation hitting everything. And that's going to make it difficult for the Fed. And that's not what you want in this market if that becomes another variable in play right now. Jump around to some of the gold stocks. Yeah, let's check the dollar. Yeah, we're catching a bid here. All right, we got higher yield and you got some dollar strength. Dollar saving itself yet again. Now here's what to think about. We got yields at almost 4.5. You got dollar weakness in a big way. What happens if you get a little bit if we do get those cuts, right? You got dollar weakness in dramatic fashion, and we get the 10-year sitting at almost 4.5 right now, and your dollar's still at 98. And gold giving it up. We're at 34.05 right now. Jump over to silver right now. SI. Yeah, silver trading flat. All right, we jump over to Boeing. So this is what I was talking about. Boeing shares up by 0.7. I look at things in risk reward, okay? And risk reward right now, it comes out that the India plane had nothing to do with Boeing. Realistically, you should be back to 213. Maybe you're a little bit higher with the market, right? That's the news. You wipe out that news, that's your potential reward, okay? Is about a 5% pop to the upside. What's your potential risk if it comes out that they had a defect or that something was going on? Right? The plane's only 14 years old. It could be a pilot deal, but this is an interesting one, and this is from the Journal Opinion section, okay? Boeing's troubles are Americans' troubles, all right? I'm not familiar with Holman Jenkins Jr., Mr. Holman W. Jenkins Jr., not familiar. But the case is to be made. We are intertwined, man, okay? America needs Boeing, and Boeing, therefore, needs America. And they're going to get America because America needs an airplane builder. Now, what he talks about in here is almost like give him the benefit of the doubt and that America is going to go in here, okay? And they talk about the 2 planes with the 737 MAX, right? And then he talks about how Boeing has the difficulty of even coming out and saying that it's not their fault anymore. And that's the tough part, okay? That even when it can be a safety pilot error, okay, and this talks about what caused the second MAX crash. Now, they had some problems, man. This 737 MAX, I'm going to say borderline criminal and being kind, okay? But it's real tough to come out and say pilot error for them at this point. We'll come back. We'll talk some Boeing. We'll talk some other airlines. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets in positive territory. S&P's up by 56. NASDAQ 100 up by 304. Yeah, we got rockets in this market, man. Oracle down by 2.2, giving back some of the gains. You got Amazon up by 2.1%. And yeah, jumping back to Boeing. So, you know, this opinion piece, it's interesting because what he says here is confusion about what happened in the second MAX crash, okay, and just points to the difficulty they're going to have in this crash, all right? Pilot error, not the plane's design flaws, was critical. Not exactly the full problem, though, okay? So he's giving them a lot of credit here. It was critical, though saying so invites, he calls it hysterical. It's a tough reaction, right? Why? Boeing had briefed MAX operators on how to offset the system failure. Folks, they had a system failure, okay? It was literally a system failure. Now, they told them how to do it, but either Boeing's instructions were faulty or the crew didn't follow them. Well, that's quite a back and forth, Mr. Holman W. Jenkins, because if it's Boeing's instructions, then that's Boeing, okay? But guess what? They can't even say it has anything to do with the pilots, because what's it do? It's a difficult parlay of how to navigate that situation, and they're going to face the same thing when it comes out probably with this. Very difficult, okay? And we'll see how it goes through, but that's a big risk there. But guess what? He also makes the case that, yeah, we need Boeing, okay? And he gives them too much credit, saying they owned up to their errors. They owned up to their errors because they were caught, and it was borderline a criminal prosecution going on, all right? But yeah, you have some real risks out here in terms of how you navigate that. No matter what happens, they're in a precarious position to defend themselves because they've lost the benefit of the doubt. Now, 128.88, I don't mind that. When you trade from 128 to 218, there's some risk on a pullback there. This market's strong, baby. We got volume. Dollars weak, though, in a big way. Folks, thanks so much for kicking off your Monday afternoon with me. Have a great night. Have a safe night. We'll see you tomorrow morning with the morning market kickoff at 9 o'clock. Thank you so much, folks. We'll see you tomorrow.